Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, Jerry, it has been quite a bloodbath for all investments as uncertainty just continues to go to new peaks in Europe, and there's just no way out. But as I said last week, people just don't understand that our problems here are worse than the problems in Europe on the long term. And we just have to realize that what we're going through now is going to be transported over here unless all these countries start printing money, which is what a lot of people are banking on. I do think the strongest evidence is that there's no president in history has ever gone in an election year and let the situation get like it is. So I'm not surprised. I won't be surprised to see Bernanke either late next week when he makes his first talk since he testified to Congress last month saying we did not need any additional easing of money. But on June the 7th, almost certainly at the end of the second quarter, a lot of people are betting he will mention it if he doesn't mention it next week. So we could have some bumpy more times and see some support levels broken. There's just no way to know that for sure, but we do know the Chinese are buying extremely strong. All my sources in Europe, they're buying not only what they're producing in China, especially in gold, but also they're buying over in England everything they can get their hands on at these huge discounted prices. When you consider the amount of money that's been created out of thin air in this world the last 12 months, and you look at where gold is, you know it's being depressed for several reasons, but we also know it always bounces back to its real value, and we have that real value right now somewhere between $1,800 and $1,900 for gold and somewhere between $35 and $38 an ounce for silver. So we are looking for a bounce back, but we may get a little more bloodshed before that happens. It's hard to tell you to buy right now, but I do feel very confident that you shouldn't sell because this market, I've seen it for 12 years, it can go up as fast as it went down when certain things happen. And always keep in the back of your mind out there as an investor when this 24-hour trading starts in China June 28th, and we start trading 24 hours a day here in the United States, and we'll get into that later as I know more about it. But you got to realize at that point, if J.P. Morgan or HSBC are shorting the market, and let's say, just for instance, they put to getting the money they need silver to go to $28, and it gets down to about $28.05, and a lot of people have buy signals put in, then J.P. Morgan's going to end up losing a lot of money, and they're not going to be so anxious to short gold or silver anymore. So we feel that's a huge thing for the end of the year, the last two quarters, that will work in our favor. So my advice right now is, while I can't tell you how low it's going to go, if any more supports are going to be broken, is to stay in and hold what you have and to cost average in to be buying, because I am more convinced than ever that this president, a lot of other things I've heard that I won't talk about on the air, but he is not going to go down to Mitt Romney without doing everything he can to be reelected, and that includes improving the economy through any means available to him. So I think we just have to be a little patient, and we'll see the price start back up. And this pretty much applies to all of the metals. And I am very, very interested in platinum now, and you'll hear me talking about that a lot more now because I've talked to top platinum people in the world in the last 3 days, and they're looking for platinum to actually go back above gold by the end of the year, and it's about $115 an ounce below gold right now. So with all that information, hopefully by the time we visit next week, I'll have some more information for you. With this week's Precious Metals Market Update, this is Tom Cloud signing out.